One of the biggest U.S. bank deals this year, if not the biggest. Fifth Third is buying Comerica in an all-stock deal valued at $10.9 billion. The combined company will be the 9th largest bank in America. I'm pleased to say that joining the program now is Tim Spence, Chairman, President, and CEO of Fifth Third Bank. Tim, great to have you on. Congratulations on this. Why this deal? Why now?
Yeah, good morning, Danny. Thank you. And based on your last segment on Tesla, I think the next time we have a deal, we're going to announce it by tweeting a photo of a spinning hubcap.
Great idea.
Yeah, listen, we're big believers. We've been patient and quite deliberate as it relates to M&A because M&A is disruptive. And it's higher execution risk than the way that you would grow organically. So in order for us to ever be interested, we have to believe that it advances our strategic priorities, that there's enough of a return premium that we can compensate for additional execution risk, and that at the end of the integration process, we're not just going to be bigger, we're also going to be better. And I think this is one of those rare opportunities that meets all those requirements. The return premium on the deal here is a 22% IRR and about 9% earnings per share accretion to Fifth Third shareholders. It's neutral to tangible book value per share at close, meaning no earn back. And those measures are all better than we can achieve purely on an organic basis. And strategically, I'm really excited because the retail franchise is the thing that has really distinguished Fifth Third over the course of the past 4 or 5 years. We've been the fastest growing large bank in the Southeast, the large regional bank in the Southeast during that period of time. And we now get access to Texas as part of our expansion plan. And in Comerica's case, the crown jewel of their company is this is an incredibly strong, disciplined middle market and commercial banking franchise. And I just think the opportunities are so significant to unlock that franchise across the broader combined footprint here. So it's a great opportunity to do it. And I think the window seemed right.
Deals of this size also, Tim, $10.9 billion, they would easily take over a year to close just because of an elongated regulatory review process. What have you heard from regulators this time around regarding this deal? Is it a much easier environment?
Yeah, I think just empirically, if you look at the speed to approval of the deals that others have announced, including one that we saw on Friday, not long beyond 90 days, I believe, from the time of announcement, there's a strong indication here that the M&A approval process is fact-based and it's going to be quick. And that matters because the second that you make an announcement like this, you're essentially fighting a battle with time and getting the deal closed quickly so that you can retain your clients, retain your bankers, and get the combined platform integrated and back to offense. So certainly the indications that there are accelerated merger approvals are an important consideration here. With that said, Fifth Third was approved to bid on the failed banks in 2023. I'm pretty confident we could have gotten a deal approved, in the prior administration as well. It's just nice to know that the process here will be fact-based, but expedient if recent outcomes are any guide.
Well, Comerica seems like a ripe target, Tim. There have been lots of conversations, lots of swirling conversations, I should say, around Comerica, whether they would sell because they had a lot of activists and investors pushing them because of some of the concerns that they mismanaged some of their interest rate exposure. Is there some right sizing that you're looking at to be done once this acquisition is finalized?
I think the CEO of Comerica, Curt Farmer, if he were here, would tell you that the process that the journey the board was on as it related to their strategic options was deliberative, and it predates the involvement of the activists. Nearly as it relates to interest rate risk, the things that make Comerica's business model great, the abundance of operational commercial deposits and all the floating rate commercial loans are what makes it hard to manage interest rate risk. So, they put a hedging program in place and rates moved more quickly than I think probably any of us anticipated. And the byproduct of that is the hedge positions have created a drag. I think we said on our announcement call it was about $85 million in lost income in the second quarter. So purchase accounting will allow us to deal with that. And the broader Fifth Third balance sheet, and in particular, this diversified range of fixed rate loan origination engines that we operate, are going to allow us to manage interest rate risk in a way that will be more neutral than Comerica had to, just given the nature of its business composition.
Well, with this deal, you also go above that $250 billion threshold, where the next level of regulatory burdens, let's call it, kick in. Just how challenging and expensive does it get, where you now need to do things like upgrade tech, legal, and accounting expertise?
Yeah, that's a great question. So we were one of the bidders on First Republic, and we had to contemplate 3 years ago crossing that line with a bullet. And when we came out of the process there, we elected just to start to pursue the build out of what we called Category 3 readiness, or 2Xing the bank inside the company. So the expenses associated with full Category 3 compliance are mostly in the run rate at Fifth Third today, and I consider them to be the incremental work that needs to be done here to be immaterial, and will be done well within the allowed time frame. So I'm confident in our ability to get that done.
I realize that you're still working through this, so I hate to jump the gun, Tim, but would you be interested in more M&A after this? You've already increased the threshold. Why not just go bigger?
We've bought one bank in the last 10 years. And we did it because we were not in a survivable strategic position in Chicago, which is a critical Midwest market for us. And the combination of Fifth Third and MB resulted in us actually gaining market share. And I think we're one of only a few large banks that actually has a higher market share 5 years after it, closing a deal than it did at the time of the combination on a pro forma basis. And that is to say we're disciplined. We don't do things unless we believe that we can operate as a combined company and be better. And that really is going to be the focus for us now, is move through the shock of the communication that's inevitable for both companies, get focused on the actions we need to take to ensure that we deliver the financial outcomes, and start the investment, because the opportunities for Comerica's unique capabilities and for ours across this combined platform are things that we could live on for years.